Good morning, traders. If these videos are helping you, please spread the word. Share it with other traders. The most likely scenario today, what is it? We have this big market breakdown right here, breaking all major support levels. Huge sell-off. The market sold off down to 480 yesterday overnight, and then it bounced during the course of the day. Deeply oversold conditions. The rubber band has been stretched. We are going to snap back. What are our most likely scenarios? First of all, we know we're going to get a bounce. We know this is a dramatic pullback. Longer term basis, we are bearish and we need to stay bearish. Short term, if you are a professional trader, not a novice trader, a professional trader, you can play this bounce on a day trading basis. It might last a few days, could last a week and a half or so. How far do we think it could get? Well, I think that this resistance level, this horizontal was support, is now resistance. That would be as high as I would like to see it go. My personal feeling is that the open of this long red candle will be preserved. This gap will be filled right in here. I can put up AVUAPQ. You'll see where that comes into play. And that is a resistance level right there that coincides with a gap fill. That's my upper target. How do we get there? Is it going to be one long green candle? Probably not. It's going to be a series of mixed overlapping candles, hopefully kind of wimpy candles, light volume candles, because sellers are still out there. They see this as a longer term risk off scenario. They don't know how the tariffs are going to play out. What's the overnight price action look like? Yesterday we had lots of choppy price action. There's your big drop down to 480, which I referenced in Sunday's video. On a monthly chart, that was a major resistance level, now support level at 480. We touched right off of it. So on a 5-minute basis, we can see the futures in go-go rally mode. So like I said, we were going to get that snapback rally. Selling out of the money puts on very strong stocks is a great strategy. Those positions are all doing well. With this kind of after hours movement and with this deep type of sell-off, the most likely scenario is that we're going to get a gap and go. That's a gap and go. There's your previous candle. Okay, so it didn't look exactly like that, but you can see on gaps up of this magnitude, the chance of a reversal and the downside risks associated with playing a gap and go are quite large. Why? Because if the market starts to reverse off of this gap up, you can see all this fill overnight leaves you very, very exposed. Now, when we do trade gap and goes, we got to be super, super careful. But the exception is when? When might we have an exception? When might our odds of having an actual gap and go be the greatest? After a big market decline like this, when that rubber band is stretched so far, you let go and it slingshots the other way. So this, off of a deep, deep drop like this is where you typically see gap and goes, and you can be a little more aggressive trading these versus a gap and go at an all-time high. Well, there you're super exposed to a gap reversal, so you don't want to use that strategy there. What is our best scenario? So this is the most likely scenario, a gap and go. How do you trade it? The only way you can trade it is you have to ease into a position because you don't want to have the risk exposure of a gap reversal. So you start out with a small trade, a small position size, and then as you get confirmation, you add to the position. What's confirmation? Green candle, red candle. Red candle gets reversed immediately by another green candle. Hey, that tells you they tried to sell it and they instantly gobbled it up and the market continues to grind higher. So you got to look for that confirmation, and that's where you're going to be adding. This is our best scenario. So you get a gap up and you get a small, wimpy little pullback. That little pullback gives us time to find stocks with relative strength. And that pullback gives us the opportunity to watch the stock tread water and even move higher when the market is pulling back. That gives us time to plan out our trade. That gives us a better entry point. You start getting into a position, and you start seeing the market rally, and then it takes out the high of the day, and then you're adding along the way, and you don't feel like you're chasing as much as you would a flat out gap and go. Now, the problem with a gap and go, and that is the most likely scenario today, the problem with this is that most of the move is going to be played out in the first 90 minutes, and then the market will typically sit and digest those gains. So those are the different scenarios you should be looking for today. Sell out of the money, very short term naked puts on strong stocks. That's the best possible play right now. Take advantage of that huge option implied volatility. Take advantage of this little bounce, but do not overstay your welcome, especially if we start getting close to filling in this gap and close to a VWAP Q. Good luck with your trading. Again, please give this a thumbs up and share it with other traders. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.